Bring in show music, please.
This is Squawk Pod, and I'm CNBC producer Cameron Costa. On today's episode, we're going inside the Federal Reserve vote to cut rates by 50 basis points, including an historic no vote. Minneapolis Fed President Neel Kashkari joins us.
I look forward and I think, which risk am I more worried about right now? A surprising uptick in inflation or a surprising uptick in unemployment? It's the latter, at least it is for me.
Who dissented and why? And have you ever looked around and thought, where are all my friends?
New to a city, new job, looking for more friends, friends leaving town, friends having babies, maybe they're having babies.
Andy Dunn, founder of Bonobos, is launching a new platform to meet new friends in real life. He speaks from experience.
I didn't have what the Greek called philia, which is platonic love, or agape, which is the love of the tribe.
Those conversations plus a federal shutdown averted. Again, FTC's Lina Khan on 60 Minutes. And speaking of antitrust, Qualcomm is thinking about buying Intel, which would be the largest tech merger ever. Our own Steve Kovac explains the appeal.
This summer, Qualcomm put out their first PC chips that are actually good. Intel is still way behind on that.
It's Monday, September 23rd, and Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin.
The latest in this saga, it's episodic. It's a saga that we talk about, it seems like every 3 months, but look, we got some government funding. House Speaker Mike Johnson unveiling a new temporary government funding proposal. Unveiled it yesterday. It would fund the government through December 20th in this case. It includes, this is kind of new, $231 million for the Secret Service in response to pressure from the agency for more resources after a second assassination attempt on former President Trump last Sunday. It doesn't include any of that SAVE Act, the Trump-backed election security proposal that was in the bill that was defeated. It would require people to show proof of citizenship to register as a voter. Lawmakers have until 12:01 on October 1st to reach a deal to avert a government shutdown. In a letter to colleagues yesterday, Speaker Johnson said, since we fell a bit short of the goal line, an alternative plan is now required. This is the plan B that he said didn't exist when we had him on last week.
I'm not addressing plan Bs. We got a big playbook. It's full of ideas. No one needs to worry.
But that's the way they do things. They don't even admit the possibility of defeat till it happens. And then Democratic Senator Chuck Schumer said the new funding bill was, in his words, good news, and that a shutdown would now likely be avoided.
We really now have some good news. There's a really good chance we can avoid the government shutdown with all the pain it would cause for New York and America this week.
Of course, the big question is what happens to Speaker Johnson in this position, because this is what has driven out previous speakers, starting with Mike McCarthy.
He's done a few of these already, and I don't know, where are they going to go after this? I think they're going to see what happens, what kind of makeup the House has after the
There was some reporting that suggested Jim Jordan was kind of firming things up in case he could potentially go for a run.
They'll wait till the election, I would think, to see what the actual numbers are.
FTC Chair Lina Khan, I'm curious to see whether she stays in her job. Speaking to CBS's 60 Minutes last night at a wide-ranging interview, here's what she said when asked if she ever worried whether the power she and her agency have could destabilize the whole economy.
Of course we have to worry, but we also should worry about the destabilizing effect that can arise from companies believing that they're above the law, and then they can be reckless, take massive risks in ways that can crash the economy, and then they can get away with just a slap on the wrist, and that creates a destabilization too.
To the point about jobs and Mike Johnson and where everybody's going to be in a couple of months, she was asked whether she'd be willing to stay in the job under a new administration. Khan said it would be an honor to have the opportunity to keep going, though obviously Harris has been super uncommittal, I think, for obvious reasons.
I didn't know you were talking about Harris.
Because she sees eye to eye with J.D. Vance on a lot of things, too.
I'm going like this, as if J.D. Vance was right there, as he was a week and a half ago.
Either administration, but I don't.
I think it's unlikely.
I don't think either administration is going to keep her, to be honest. It could be either or both.
No, I think it's very
neither.
90% chance.
That neither.
Yes.
I like that. Back to the. What was she talking about? Taking risk, and that can bring down the.
Well, everything's a trade-off in life.
But
it is.
She's back to 2008 with the. Yeah, I might be destabilizing the economy, but these companies, by taking risk, destabilize the. They could bring it down to. I don't know.
Well, the argument around competition is when you see, whether it's a CrowdStrike situation or whether you see 2008 or you see. All sorts of, or prices go up in some crazy ways. Some of that does have to do with not enough competition.
They consistently go after.
I'm not.
But they define a marketplace based on like the 20th century. They talk about groceries and they don't bring in Amazon and Walmart. Their whole view of the world is so anachronistic, and I think it's bad for progress. I do. I can't believe Leslie Stahl asked that question, but I think that is a key part. I think it's probably a headwind, the way she runs that agency. A headwind.
I think it's a headwind.
Innovation and progress.
On the whole, I think it's a headwind right now.
Right.
I agree with that.
Okay.
Two large chip makers have discussed building mega factories in the United Arab Emirates. That's according to a Wall Street Journal report that says top executives at Taiwan Semiconductor recently visited the UAE to talk about the possibility of building a large advanced facility there. It said Samsung executives have also recently visited the country and held similar talks with officials there. Both companies have also had conversations with U.S. government officials about concerns about shipments of advanced AI chips into China. Construction of factories probably wouldn't start until those concerns are resolved.
Which is never for us, probably.
Yeah, probably.
I think it's interesting that.
The way to get around any of our.
Let's go. It takes a lot of power to do this. Let's go to where the oil is. But then again, it takes a lot of clean water. They don't have any clean water. It's all desalinated water.
Well, I think this is actually more of a UAE and some movements that have been made in Saudi Arabia and other places where they are looking to figure out what the next issue is going to be in Saudi Arabia.
Well, we're trying to do it here.
They just want to be a power source for.
Well, they got all the money from the sovereign wealth. But
and they want to be diversified in any way.
They got all the oil money they got to diversify into. But the concern, since they're so close to China, we're not going to let that happen. And when do we get, until these concerns between the U.S. and China are resolved, when is that going to be? Taiwan will be gone by then.
It's going to take a while. India's Prime Minister Modi meeting with top tech executives leading the global AI revolution. Our own Steve Kovac was there, and he spoke to CEOs of both IBM and NVIDIA yesterday, and he joins us now with some of the highlights. Good morning, sir.
Good morning. Yeah. So, like you said, Indian Prime Minister Narendra Modi meeting with several tech CEOs Sunday in New York ahead of the UN General Assembly that's going on all this week. Among the attendees was NVIDIA CEO Jensen Huang, Alphabet CEO Sundar Pichai, and Accenture CEO Julie Sweet. You can see the rest up there. The topic, of course, artificial intelligence. Tech companies from Apple to Google see India as a prime investment area thanks to a growing middle class and large workforce. And I was able to catch up with two of those attendees, Huang and IBM CEO Arvind Krishna. Let me give you first Huang's overview of the meeting with Modi, praising Modi for understanding the importance of AI.
Prime Minister Modi is inspiring. Every time I've seen him, he is such an incredible student. Loves technology, loves artificial intelligence. He was one of the first people I ever explained artificial intelligence to. This is an extraordinary time for him and time for India because it's a reset of the whole computing stack.
Now, I also asked him if he discussed with Modi kind of clearing up that bureaucratic red tape American companies often complain about when they're trying to invest in India, but he actually said that's not really a problem for NVIDIA in India. Take a listen.
I haven't really experienced that. NVIDIA has been in India for almost 25 years. Our design centers are in Bangalore, Pune, Hyderabad, really fantastic engineering capability there. Some almost 10,000 NVIDIA engineers are in India. They do every single aspect of our engineering, and so they've been a part of our company since the very beginning.
Now, another company that has a big presence in India is IBM. So Krishna from IBM was also at the meeting and praised what happened there and told me a bit about the delicate dance of doing business in India, even though it's tacitly supportive of Russia by buying the cheaper oil from that country. Take a listen to what he said there.
Countries are going to do what benefits each country. So you got to put those things a little bit to the side and say, is there any national security threat? So let's look at the major things. If you look at the geopolitical lens, doing cooperation between India and the U.S. is going to be strengthening both these nations to the point where then you can go take care of all the other secondary issues.
Krishna later told our Seema Modi it's up to the U.S. government, not private businesses, and said the U.S. has been encouraging businesses here to do business in India. And finally, just as a kicker here, guys, I asked Wong about that Qualcomm-Intel merger report that we got on Friday. Here's what he told me about that.
We're doing it our way, as you know. We're a very different company. NVIDIA builds the full stack of AI infrastructure. We build everything from chips to systems, networking, to CPUs, to GPUs, to switches. We write an enormous amount of software, from algorithms all the way to applications for artificial intelligence. And so we're determined to move forward in the way that we do. And I think in this new world, you really have to be a computing infrastructure company to be able to bring all that technology to bear.
So I think the implication there, guys, is they control what Wong called that full stack, meaning the software and hardware part. That's the competitive advantage they have there, guys.
So, Steve, here's the question. Going to that last point about this deal. Do you see the U.S. government and do you see
I know where you're going
allowing
with
this deal? Is this a good deal? In some ways, it would probably... Look, if you can get Intel, if you get some competition to NVIDIA, that would be a good thing. 80% margins are great for NVIDIA. It's great for Jensen. It's amazing what they've been able to accomplish. But long term, if you want AI to actually have any kind of true economics, that's going to have to be sliced in half, if not more so. The only way that's going to happen is if you get competition. The question, though, is do you want competition coming from a company that's owned by Taiwan, even though they're maybe our allies, or do you think that it has to be owned by somebody in the U.S.?
I was looking at it a different way, Andrew. I was looking at it from the PC business and where Intel and what's really going on here with Qualcomm on the PC side. This summer, Qualcomm put out their first PC chips that are actually good, meaning they can run faster. They're like on par with what you experience on your Mac. They're based on the same technology as those. Intel is still way behind on that. That's why Apple ditched Intel. So I almost read this as a way for Qualcomm to kind of expand its PC footprint more so than this AI thing.
But you don't think it helps on the AI front?
Oh, it can, but Intel's AI chip, we don't know where it is. Qualcomm isn't necessarily producing those kind of chips. It's still a mobile-first company and IoT and things like that.
What possibly, I mean, this is like a backdoor way of getting the CHIPS Act money. Like,
exactly. Or that too,
What can possibly happen? I can't imagine people in Washington are pleased with this.
Right.
Or would say, okay, sure, no problem. We'll just change the name on the check we're writing these chips.
Well, you also got to keep in mind, like
the
CHIPS Act money. The CHIPS Act money is a bet on a part of the business that Intel hasn't proven it can do yet. That making of the chips, not necessarily designing chips or computers.
But the idea that you're going to say, okay, we were doing this for an American company, we were investing in American tax dollars, and you've promised us this, and now some other company is going to come in and say, no, we're going to take it over for this slight premium.
Still a U.S. company, but
but still, it just seems like, okay, this is the problem with governments really getting involved and picking winners on this stuff. You lose any access to it.
And we know the current regulation regime right now in the U.S. does not like these chip deals. NVIDIA tried to buy ARM, remember, and that was blocked. And ARM eventually went public. That's what these regulators really, I know you guys were talking about Lina Khan earlier. She likes to see that. She likes to see these companies thrive on their own and go public. So I can totally see that argument being made. It also sounds like it's super preliminary.
Yeah, but
too.
I can also understand if you want to put a $5 billion investment in it, that would be almost like an equity deal. Maybe you work out some Warren Buffett thing where you get warrants or something that comes along with it. You're putting your money in alongside it. But to come in and say you're going to take over and do it, that's a totally different argument.
That's a big, and accept that money and all the strings that come along with it. It's unproven. I mean, it's a weird time for the government to be giving Intel a lot of money.
Tease will be next.
Still to come, Minneapolis Fed President Neel Kashkari joins us in the wake of the central bank's 50 basis point interest rate cut. He says the economy is strong, and they're trying to keep it that way.
We always want to learn from our mistakes, and we don't want to repeat those. That's not what's driving this move, but we are aware of the mistake that I think that we collectively made in holding rates a little bit low for a little bit too long.
Squawk Pod will be right back. This is Squawk Pod.
You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin, along with Joe Kernen and Becky Quick on this Monday morning.
Joining us right now on the economy, the Fed's 50 basis point rate cut last week and much more is Neel Kashkari. He is the president of the Federal Reserve Bank of Minneapolis. He published an essay this morning explaining why he supported that 50 basis point cut, saying that in his view, the balance of risks has shifted away from higher inflation and toward the risk of a further weakening of the labor market. And President Kashkari, thank you for being here.
Thank you, Becky. It's great to be with you.
We've had a lot of people trying to figure out exactly why the Fed went 50 basis points last week. So maybe you can explain. If you are worried about the labor market at this point, is this the equivalent of saying mission accomplished when it comes to inflation?
Well, I think all of us are reluctant to ever declare mission accomplished, but certainly the risks have shifted. I look forward and I think, which risk am I more worried about right now? A surprising uptick in inflation or a surprising uptick in unemployment? It's the latter, at least it is for me. I think right now we still have a strong, healthy labor market, but I want to keep it a strong, healthy labor market. And a lot of the recent inflation data is coming in looking very positive that we're on our way back to 2%. So I don't think you're going to find anybody at the Federal Reserve who declares mission accomplished, but we are paying attention to what risks are most likely to materialize in the near future.
That makes a lot of sense, but it also makes a lot of sense for why you would have cut 25 basis points. Why go 50?
Well, I think it's a judgment call. Ultimately, even I said, I've been on the more hawkish end of the committee over the last couple of years. Even I say after 50 basis points, I still think the policy is in a net tight position. At some point, we're going to be coming to the question of, are we at around neutral? There's a lot of ambiguity around neutral. I write about that in my essay. Other people comment on it. And at some point, we're going to have to debate, are we getting there? I think after 50 basis points, we're still in a net tight position. So I was comfortable taking a larger first step. And then as we go forward, I expect on balance, we will probably take smaller steps unless the data changes materially.
I mean, I guess that's the biggest question for it. As somebody who's watched over a long period of time, I'm used to 50 basis points signaling the Fed thinking it's behind the curve and that there is a real emergency in order to do something like that. If this is things are looking great, but we're still cutting 50 basis points, I don't get it.
Well, it's just we're in a relatively tight position. Let's take a meaningful step to get on our path. Ultimately, we want to get back to a neutral policy stance where the economy's in balance and we're not pushing the economy one way or the other. And this was just a larger first step to get us going. I think if you look, we've held rates at a pretty high level for an extended period of time, longer traditionally than history. And this is just acknowledging, let's take a step now toward neutral, recognizing that we're still tight.
I guess part of, we've had so many armchair psychologists, and we've played some ourselves, sitting here trying to figure out what the reasoning was behind it. I'm going to throw a couple theories at you. You tell me if anything sounds right, if anything sounds crazy. Okay. One of them was, okay, the Fed was behind the curve on raising rates when inflation was really hot. They don't want to repeat that mistake. Another was, okay, this is an unusual time in the calendar where, they didn't move in July, didn't have a meeting in August. They don't have a meeting next month, so maybe this is taking the combination of all those 4 months and kind of putting it into one package. And then you have people asking about the election here, too, and why make a big move ahead of the election?
Well, I think the first two, certainly we were late, and I was late in raising. We always want to learn from our mistakes, and we don't want to repeat those. That's not what's driving this move, but we are aware of the mistake that I think that we collectively made in holding rates a little bit low for a little bit too long. So there's always learning that's going on. I do think that the calendar in terms of when our meetings happen and when the data releases happen, that's a factor, and we get data with a lag. The GDP data, it's been well documented, is backward looking. And then by the time we get it, by the time we can factor it in. So that's always ever present. And then the election, as Jay Powell has said many times, and I think all of my colleagues have said, it's simply not a factor in our deliberation. And so I think the first two theories that people offered you, those are not crazy theories. All of those go into our risk assessment of what's the best action we can take to ultimately hopefully achieve a soft landing and preserve our dual mandate goals.
Michelle Bowman, the governor of Michelle Bowman, actually dissented. She voted for 25 basis points, and it doesn't seem like a big deal to have one dissent. It's the first time there's been a dissent, though, at the FOMC since 2005, so almost 20 years. Was it a more contentious meeting? Was it a more thoroughly discussed meeting?
There was active deliberations. There was active deliberations at the meeting. There was a lot of discussions, obviously, leading up to the meeting. And ultimately, look, for those, whether it's Governor Bowman or many people on Wall Street who said, hey, 25 basis points is the right action, I don't think I would have argued against 25 basis points and said, oh, no, we're making a mistake. I think that 25 was reasonable, 50 was reasonable. It was just ultimately the judgment of the committee that 50 made more sense to get going. What's interesting is that nobody on the committee was saying we should be holding here, not even Governor Bowman. And so there was unanimous view that we should take steps to begin dialing back our policy stance in the face of the changing landscape of inflation and employment.
Neil, back in the 80s and 90s and even beyond that, when we just had seems like a totally different rate structure in terms of where Fed funds were and the 10-year and everything else. Was inflation correspondingly higher so that, a tighter or more restrictive policy made sense back then? I don't remember inflation being at 4% and 5% in the 80s and 90s. I remember it being low and rates just always being structurally higher. It just seems to me that we got almost addicted to low interest rates after the twin crises, and here we are headed back down there for no reason, instead of keeping our powder dry for the next serious break that always seems like it's coming. Why not just, you work hard to get to those 500 basis points. Why not keep them till you see some trouble on the horizon?
Well, Joe, if you look at for example, in the essay that I published, I describe my SEP, my dot plot, my individual forecast, and I'm coming in at a much higher level than I was prior to the pandemic. And so what you're getting at ultimately is, where do things settle out when the economy's at neutral? There's a lot of uncertainty about where ultimately we are headed. It's interesting that markets are not pricing in going back down to a 0 federal funds rate or a 1% federal funds rate.
God.
So the markets seem to be buying a longer or higher for longer strategy narrative, and that's what we just have to watch and see how the economy evolves.
Right. Hey, Neil, what do you think a long-term unemployment rate should be in the United States?
Well, another great question, Andrew. Prior to the pandemic, we kept getting surprised. I was one of the lonely voices arguing against interest rate increases because we kept getting surprised as the unemployment rate went lower. We were not seeing an uptick in inflation. And so if those two things if that can happen, then let's let it run. So we were at 3.5% in unemployment prior to the pandemic with inflation below 2% target. I would love to get back there to that constellation of 3.5% and around 2% inflation. We'll see. Right now,
wasn't that an historical anomaly? I mean, is there a regular run rate that you could run a country at an unemployment rate of 3.5% on a sustainable basis?
I mean, I don't know. We had it for a couple of years. We kept getting surprised, and it wasn't leading to inflation. The one constant prior to the pandemic and now this inflation episode, the labor market has not been what's driven inflation. It didn't drive it before when we thought it would. It didn't drive it this time when we thought, well, there's still slack in the labor market, and yet we had an uptick in unemployment. And so one of the things that this unfortunately reveals is how many different factors go into the inflation process. We spent a lot of time focusing on the labor market as the source of inflation. At least since I've been on the FOMC the last 9 years, it's been a lousy forecaster of inflation.
How connected do you think the issue of housing and mobility, and when I say mobility, not just upward mobility, but just the idea that there are people who may be stuck in their homes, if you will, given the current mortgage rate, and as a result are not taking either other jobs or moving from a sort of around the country in the same efficient way you would want them to, given this sort of locked-in state of affairs?
I think there's some truth to it, but I think that's a temporary factor, just given how quickly rates repriced on the way up and the refinancing mechanism. I think if you look over time in the last few decades, movement, I distinguish mobility from movement. Movement has declined in the U.S. economy, which on the surface looks troubling. But one of the things I realize is people are willing to move. They're willing to uproot their families for jobs that are much better than what they have today. That's what American history has shown. They're not willing to uproot their families for an extra $1 an hour or an extra $2 an hour. And so for me, when I talk to my economists about mobility, I focus on movement and why people are choosing to move or why they're not choosing to move. And has the labor market, perhaps with digital technologies and Wi-Fi streaming, maybe the labor market is becoming more homogeneous, so there's not this great opportunity to move across the country because maybe there's some more remote possibilities. So it's a complicated topic, Andrew.
Neel, just to clarify before we let you go, you're thinking 50 basis points more cuts this year, meaning 25 basis points in November and December?
That's what I've penciled into my dot plot. But of course, as we all say, it'll depend on how the data guides us. But yes, I think that's a reasonable starting point.
Okay. Neel Kashkari, want to thank you for joining us today.
Thank you for having me.
Next on Squawk Pod, entrepreneur Andy Dunn founded menswear company Bonobos. He then sold it to Walmart and prioritized his mental health after a busy startup career. Now he's building a company to help adults navigate a diminishing asset, friendship.
I think there's some adults who want new friends, and I know some other adults who want no new friends.
Some adults are oversubscribed with friends.
Lonely? There's an app for that, and it's not what you're thinking.
Doing things that you like with people you love should be as easy as calling an Uber.
You're listening to Squawk Pod.
Up and Andrew, Q.
Welcome back to Squawk Box. Entrepreneur Andy Dunn is the co-founder and former CEO of clothing brand Bonobos. He's now building a startup aimed to help adults make friends, new friends, called Pi. It's currently live in Chicago, recently raised more than $10 million in funding and is backed by Twitter co-founder Evie Williams. Joining us right now, first on CNBC, is Andy Dunn, who's the founder and CEO of Pi. He's also the author of Burn Rate, Launching a Startup and Losing My Mind. Andy, it's great to see you. Tell us about this new business. I think there's some adults who want new friends, and I know some other adults who want no new friends.
Yeah, some adults are oversubscribed with friends. What we are for are people who are at a life inflection point. So new to a city, new job, looking for more friends, friends leaving town, friends having babies, maybe they're having babies. That was my experience. I was a new dad, new to a city, had just moved back from New York to Chicago, and I was surprised at how lonely I was. I had these great familial love bonds, but I didn't have what the Greek called philia, which is platonic love, or agape, which is the love of the tribe. And so I thought Pi would be a way to go, place you could go to make it easier to make friends.
So how should we think about this in relation to social media sites and how maybe compare it even to a dating site?
Yeah, so look, the Surgeon General has said over the last 20 years, we've lost 24 hours a month in time with other people. And by the way, 20 years ago, we were already talking about the degradation of the American social fabric. So our belief is we've got to put two to 3 hour hangouts back in people's weeks to reverse the trends of the last 20 years. And social media has only made those challenges more difficult. I mean, we call it social media, but if you really think about it, it's quite antisocial. And so the goal of Pi is how do we get people digitally addicted to getting off their phones and getting into in person in real life where they can meet new people and make friends.
Hey, Andy, this is not specifically designed for like neurodiverse people, but is it suitable for? Could it be used? But do you know what I'm talking about? It's a major deal for people that might be on the spectrum or whatever. And there are other websites that sort of help with that. Is this just for totally mainstream people, or could neurodiverse people be involved as well? Do you think?
Yeah, look, I think we all have mental health, right? We all go through times in our lives
or don't have it. Yeah. Right.
Where we experience a mental health crisis. And what we're focused on, to the question, which is a great one, is specifically this issue of social isolation. Social isolation is something that we can't medicate. We can't treat it through traditional mental health pathways. Our belief is we had to build a consumer app that could change the zeitgeist. You know, the way we talk about it is doing things that you like with people you love should be as easy as calling an Uber, and that's our medicine.
Andy, how does this just walk us through the mechanics of it, and also the distinction between sort of how it actually works in terms of meeting somebody new, and then what the day-to-day of it looks like relative to maybe some of the other sites that we're familiar with?
Yeah, so the new science of platonic says there's two ingredients in the origins of a platonic friendship. Seeing someone 5 to 7 times in a group setting, and then at some point on that journey, mutual disclosure of vulnerable information. And so what we seek to do at Pi that's different than some of the competition is, rather than get you out once, we want to get you out again and again in a recurring way. And so we have free events on the app organized by what we call IRL creators. These are in-person influencers where you can go again and again, meet people. And it sometimes isn't until you've seen someone 3 or 4 or 5 times that you fork out and start to spend time one-on-one. And so these recurring free events are at the core of the Pi experience.
Right. What's the business model?
So eventually we see 3 pathways. One is enterprise, one are venues, and then eventually consumer freemium or subscription. But the enterprise one I want to talk about for a second. So according to Dr. Vivek Murthy, the same Surgeon General's report, employers have lost $154 billion a year due to social isolation and absenteeism. So we have a pilot right now underway in Chicago with a global strategy consulting firm to see if we can stimulate more friendships in the workplace, because it turns out the number one predictor of happiness at work is having one platonic friend who you work with.
Andy, I think maybe the way employers could do that is just say, come back to the office. A lot of the social isolation is because people aren't working in the office. And I can understand how young people in particular have a hard time with that, because that's how most of us made friends when we were coming up through the ranks.
Totally. That's how we came up. And at Pi, we have 10 people. We're in River North in Chicago, and we're 5 days a week in person. We were lucky to do it that way because we were building Pi from the ground up. But what do you do if you're a CEO and you're trying to deliver on a mandate of, hey, come back 3 days, now 4 days, now 5 days? Of course, people will comply, but how do you make that something where people are being pulled in rather than pushed? And so the vision of Pi is, let's create more social collision both inside of work and outside of work at these free events, which is where friendships are really formed. Now I want to go in, not because I have to, but because I want to go see my friends.
I know. It's just that if I'm an employer, I'm going to pay you to try and help you make friends when you're not coming back into the office every day. It's like, wow.
Yeah, no, I think the idea isn't that we're going to pay you to come in. The idea is we're going to make it easier for you to not only have some social collision at the office, but now things to do outside. Because as you remember, and as I remember from coming up, the friendships began at work, but it's outside of the workplace where they're really deepened. Those bonds are forged, and you can get to that level of mutual disclosure of vulnerability that really deepens and solidifies the relationship.
Okay, Andy Dunn, we appreciate it. By the way, I'm still wearing my Bonobos socks, so it's great to see you. Thank you.
I love it. Great to hear you, Andrew. Thanks, everybody. Have a great morning.
That's Squawk Pod for today. Thank you for starting your week with us. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin weekday mornings on CNBC starting at 6 a.m. Eastern. Get the best of our TV show right in your ears when you follow Squawk Pod. You can follow wherever you get your podcasts and then come back and listen anytime you want. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.